welcome to another video at thetraderguy.com. This is Chris the Trader Guy, and I am looking at the Kiwi dollar. It is currently July 23rd, getting ready to turn over to the 24th. And for those of you in Asia that watch, it is the 24th. Good morning. Anyways, to make a long story short, as far as what the video is going to be about, this is about the importance of looking at multiple time frames and the importance, at least in my opinion, of the Kiwi dollar. Now, if you read the article that accompanies this video, you know that this is one of my favorite pairs, and the reason being is that yes, it is a doll, it's a commodity dollar, commodity currency, but unlike the Aussie, which is highly correlated to gold, or the loonie, which is highly coordinated to oil, the Kiwi dollar, or New Zealand in general, exports a lot of agricultural goods. So most of the goods that they export in aren't big enough markets to move the Forex markets. So having said that, and the fact that it is traditionally a high yielder, the Kiwi is essentially a question. And the question is risk appetite on or is it off? And with the way the markets have behaved the last couple of years, you know that the only question you really need to know is whether or not traders are feeling the risk on or risk off sentiment. That's why the Kiwi dollar has become so important to me, especially over the last couple of years. It really has kind of come to the forefront. So looking at this chart, and this is a daily chart, you can see what's been going on. The recent action has been very consolidative, and that's not that surprising for a couple different reasons. Number one, we're at the 80 handle. It's a large psychological number, and for those of you who've seen my videos or talked to me or seen me in the forums or whatever, you know that on almost all of my charts I almost always have the 500 pip levels marked off, just simply because I find that Forex markets tend to respect them. Now, having said that, we bounce up against the 80 after a significant fall and then a bounce, and we've kind of gone nowhere. Now, there's a couple different ways to look at this chart. There is the possibility, and I'm fully aware of this fact, that we have this massive move higher, we get this consolidation, and then we pick up again. A lot of times consolidation really is just a pause before the move higher. Alternately, the other theory that I kind of have out there, let me switch colors here, that I've been kind of thinking about is we had the significant move lower late April, early May, and notice when we started to bounce back up would have been June. Well, that's the summertime. That's the least liquid, less big players involved in the markets. So maybe, just maybe, a lot of this would have been short covering. It's a possibility. Who knows? These are just theories, and there's really no way to know this until later when we see the move. Now, the backdrop, and the reason I brought the date up in case you're watching this later, is the fact that we all know, and actually today was the day that Germany got put on negative outlook from Moody's. Granted, the ratings agencies are a bit of a joke these days, but it can move the market, and if they do get downgraded, that will play havoc with the whole euro bond situation if they do decide to go with the euro bond, which consequently would solve a lot of the problems, at least in the short term. So with all this going on, we have this consolidation. The markets really aren't doing much. They're kind of banging around. We're having sudden knee-jerk reactions. You can see we shot straight up on one day, and then basically shot straight down here recently over the last couple of days. So with all of this being said, what is this chart telling us? Like I said, right now it looks like it could be either a pause that refreshes, or there is the possibility that we go lower. Well, let me zoom out a little bit and go to the weekly chart from this daily chart. When we look at the weekly chart, you can make a case, and I'll be the first to admit this is kind of a sloppy trend line, but you can make a case that we have broken down the trend line going back to earlier this year, have bounced off the 75, come up and retested it, and now we're waiting to see what the next move is. And that is valid technical analysis. you have to give a little bit of leeway. But I found, much like the support and resistance zones, a lot of times these trend lines are zones as well. They're not to the pip, obviously. So looking at all this, there is this possibility. What I find even more interesting, when I zoom out to the monthly, you can see that it just looks overextended. But that's kind of the nature of this pair. You can see that the Kiwi will just shoot up these impossible angles. But notice how we're getting really noisy as we come up here. And let me zoom in just a little bit. You can see that, you can go to a line chart here. You can see that recently we've had a pretty significant high, and then the high gets lower, and then assuming this is a high, this high is getting lower. So that's essentially what's really kind of got my attention all of a sudden. Going back to the bars and then the weekly, let me zoom out just a little bit to make this a little bit more obvious. Now I start to look at this pair and I notice, obviously 75 is supportive, and I would fully expect that. But I also notice this. This descending triangle really could be a serious thing. Let me go ahead and put a couple more lines in now. I'll put in the 65 and the 60. Okay, so we have the Kiwi dollar, and this high here is lower than this high, the very definition of a possible downtrend. We are starting to find a lot of support here at 75. Again, not a big surprise. So now we have this, what I think is possibly a descending triangle forming. And we could be looking at a while before it breaks down. In fact, it looks like it's going to line up roughly with the end of summer, assuming that we get a couple bad weeks. If that's the case, that would make sense as well, considering the fact that that's when the quote-unquote big fish come back into the pond. So we have this triangle. We measure the height, and this is basic technical analysis. Most of you will know this out there, but I'm assuming some people were watching that have very little experience. And this height is 1,300 pips. So assuming we break out at 75, that puts us down to 62. And these are rough figures. It'll be off by a little bit or whatever. But notice right at 62, what do we have? We have the tops of this reversal bottom from the credit crisis. So essentially, it looks like if we break down, we could go all the way down here. Now, what will this mean going forward? This will mean that the dollar will reign supreme. This will mean that there'll be some kind of panic in the market, would be my suspicion. Not based upon, I don't think that this pair will grind lower. I think it's going to move significantly. It tends to sell off rather rapidly, so that wouldn't surprise me either. As a side note, the euro dollar has a daily bearish flag, and I'll go ahead and pull it up real quick. Go ahead and zoom out. Has a daily bearish flag that measures for a move down to 115. We all know that the euro is the epicenter of the crisis right now. This measures down to 115. So it's not a real stretch to think that something bad comes out of Europe and there's some kind of sudden sell-off. That being the case, I think the Kiwi dollar is trying to tell us we need to keep our eyes open. If the Kiwi dollar goes through 75 on the downside, this could open the floodgates to a lot of risk aversion. So certainly it looks like we could see real dollar strength going into the markets, perhaps after the summer. This could be a pretty rough fall. Looking at this as well, there is also the possibility that we break out of it and we go the other direction. If that's the case, this is a very bullish sign, and that would totally negate everything I just said. But right now, as the charts look, it looks very bearish. It doesn't mean that you want to jump in feet first. We'd have to, at the very least, break down below the 78 level to break this area to even test the 75. But my suspicion is we're starting to see things like Spanish states needing bailed out. We're starting to see municipalities in Spain needing bailed out, which this, of course, will all lead to Spain needing bailed out. And that, my friends, is a huge problem. So keep an eye on the Kiwi, even if you're not willing to trade it. You don't typically trade it, and quite frankly, there's really not a setup right now. But watch this pair. This pair is highly sensitive to risk, and right now it's telling me, at least as things set up right now, it looks like there's a lot of risk to the downside.